Hey everyone, it's Sophia, your favorite realtor. I am here with Justin. Go ahead and introduce yourself, Justin.
Hello, I'm Justin with the new home team of Cross Country Mortgage.
So we just wanted to take a little moment here to answer a few of the frequently asked questions that I always receive about the lending side. So Justin, one of the main questions that I get is, do I need excellent credit?
You do not need excellent credit. The standard credit scores is about a 580 for FHA and typically like a 620 for VA and conventional, but I have seen FHA loans qualified as low as 540. Even lower sometimes, it just depends on the overall profile, but no, you definitely do not need excellent credit.
Okay, perfect. The next one I get is, do you need to run my credit?
Yes, so to be able to give you an accurate answer, we do need to run your credit. People have the concern of running their credit and their scores taking a hit. As far as the concern with running your credit and hurting your scores, it really doesn't. I've been doing this for about 17 years and I've run credit so many times. I've run people's credit multiple times, as sometimes it takes a year or two for them to finally get everything together. So along the way, as I've run credit, I do not see it make a significant impact whatsoever.
So the next question that I get is, does every client get the same interest rate?
No, so that is a very loaded question when people ask me about interest rates because there's so many factors. There's so many different variables in there. Everybody is not going to get the same interest rate unless they have the exact same scenario. So I do have clients who, they get a certain rate because of their whole overall profile of what they're doing, and they compare to somebody else who might be putting much more money down, might have completely different credit scores, different property type. So there is no way to really compare apples to apples unless you and that other person are like a mirror match of your profiles.
The next one is, how much down payment do I need?
So that's a common question that I get, and the good news is you can do zero down. There are down payment assistance programs that are based on income limits. There's VA loans, which is a great program, so if you're a veteran and you're eligible, you can do zero down with VA loans. And then there's FHA and conventional loans that allow as low as 3 to 3.5% down. And the benefit with that is, one of the misconceptions is that people think you have to be a first-time home buyer to qualify for FHA or low down payment conventional, and that's not true. You do not have to be a first-time home buyer to do as little as 3% with conventional or 3.5% down with FHA. So VA is zero down payment assistance, you can get zero down. FHA 3.5% and conventional as little as 3% down.
So another question I get is, can I use cash for my down payment?
No cash. So we hate seeing cash. We have to source deposits. We have to source where the money comes from. So what we're looking for is the last 2 months of statements, bank statements, and we need to see the money in your account. If you have a large bag of cash and you deposit it during a loan transaction or within 2 months of buying a home, it will cause problems, and that money is typically ineligible for use. But that is something that we like to handhold people on. So if you do have a bag of cash and you plan on using it for down payment, please contact us or a lender to help guide you through how to best use that money and not have problems during escrow.
Next question I get is, what is the difference between a pre-approval and a pre-qualification?
Yes, so a pre-qualification is basically someone's best guess off of verbal information. So you tell them what your credit score is, they might run your credit, you tell them your income, they look at a general picture of your profile, but it's all based on verbal information. It's not really based on really analyzing your documents, analyzing your income, analyzing your assets, analyzing your credit profile. So it's more of somebody's best guess versus a pre-approval is somebody has actually taken the time to thoroughly analyze everything and give you solid information.
So the last question I have for you, Justin, is, what's the difference between yourself and a big bank?
So the difference between me and a big bank, in the mortgage industry, there's 3 common complaints. There's communication, there's turn times, and then there's closing costs and rates. So typically the big banks, the communication is horrible. Once you start the process, from there on out, you can never get a hold of your loan officer. It's hard to get answers, and almost any realtor you talk to will confirm this with the big banks. Then there's closing times. So most big banks cannot close loans in less than 30 days, even 35 days if they're lucky, which causes stress, financial costs. Most banks lock your loan for 30 days, and once they start to exceed that, you have to pay lock extension fees. And then typically, if you don't close your escrow within 30 days, you might have penalties from the seller, which could also add up to thousands of dollars. And then last is the fees and rates. So a lot of times the banks will quote somebody really low fees or really low rates to get them started, and then halfway through or at the end they change the numbers on them. And that causes so much stress and anxiety, and it's already too late for people to make a change. So with us, I feel like our communication is the best out there. We rely on word of mouth and referrals, so it is so imperative to us that when people leave our office or work with us, that they're raving fans, that they love the communication. So I guarantee our communication is better. Our turn times, our average turn times last month was 17 days from start to finish. We are probably the fastest lender out there. So meeting the turn times is guaranteed by us, and any lock extensions, any fees, anything like that, we pay it, so we guarantee it. And then third is our fees and our numbers. We guarantee our fees and our numbers. I take that very seriously, where if somebody meets with us and we quote them a payment, we quote them a rate, we quote them fees, we guarantee that 100%, because that's somebody's financial, well-being, their budget, everything's relying on that. And for people to, halfway through an escrow get that changed on them, it's pretty crazy, and it happens. So I think that's one of the biggest differences, is we really make sure that we're the best with communication, with turn times, and we guarantee our numbers.
Perfect. Well, that's all I have for you today, Justin. Thank you so much. If you guys have any more questions, feel free to reach out to myself or Justin. You can follow us on Instagram as well, and we'll have our contact information below.
Thank you.
Bye.